6th of March 2025. And the question that a lot of people in the crypto space are asking is XRP to the moon? To which the answer is it's totally moot if you're a low time frame trader. We don't care about price action individually. We just don't care about which way an asset goes because it's completely moot. Right? It doesn't matter if an asset goes up, down, or sideways. When I say it doesn't matter, I mean it really does not matter if you're a low time frame trader. Now, if you're an investor and you're holding XRP, well, then you might have some different questions you might want to ask. First of all, why are you holding that Bankster coin? Are you holding it because you think it will have additional value in the future? It will bring you greater returns? Are the probabilities that it will increase in value over time? There certainly is a probability that it can. Right? It certainly seems to have a future ahead of it. There are a lot of things about it. The people that manage the project or the coin, right? The folks from the company Ripple, which is an exceedingly successful company. They're quite good at what they do. Right? They make quite a bit of cheese as the company Ripple, right? And the project XRP, which it created, or the coin XRP, which it created, is just one part of what they do, right? And the fact is they have built very strong relationships and really spent a lot of time investing in those relationships, making sure that all the pieces are in place for XRP to be ready and set to have a bright future. Now, the question is, will they have an actually bright future? Well, it really depends on what those relationships bring to bear. Will they bear fruit? Or will they bear poison over time? Well, XRP is what? XRP is a form of transfer liquidity. Right? It's a form of exchange, really. It's grease to help the wheels move faster. It is a way for people and organizations to transfer money from one place to the next in a not so simple way, although it may appear simple to the end user. But for example, instead of, let's say I want to send you pesos, but I live in America, so I'm going to send you dollars from my bank account, and you live in Mexico and you're going to receive pesos. So I would send you dollars to my bank account. I would then order a transfer order to your bank account in Mexico. They would then have to convert the dollars to pesos and send it to you, or they would have to send the dollars to your bank in Mexico, and your bank in Mexico would transfer those dollars to pesos and put them in your account. And that process can take days or even weeks, depending on how much you're sending it, what else may be causing the transfer to slow down. For example, if they have to review anything, if you're sending significant amounts, they can often need to review it. With XRP, you're actually adding a layer of complication in the middle because, for example, if I want you to receive pesos and I have dollars, so I basically swap the dollars for XRP, and then the XRP is swapped for your pesos. So there's an additional layer of conversion that happens when you send via XRP, right? And there's all this other stuff that happens along the way. It's quite a not simple process, to be honest, but to the end user, it appears simple. Most importantly, it's very fast. Huh? קרן מולסקין, פנחס ספיר, חיפה, כתוב שמה. קרן מולסקין 12, פנחס ספיר 13, חיפה 14. אתה רואה?
חיפה 14.
כן. אוקיי? So when you use XRP, you are effectively adding a layer of complication to the process. However, you're reducing the time that it takes to send the transfer. So rather than taking days or even potentially weeks to send a significant sum between parties internationally, or even domestically, by the way, if you send more than, say, $10,000 inside the US, then there'll be a flag on your transfer for review, and they need to review the transfer and make sure that everything is okay, and then they can send it. But it'll take, instead of taking less than a day or less than 24 hours or whatever, 72 hours, it might take a week, depending on how much it is and what it's for and who you're sending it to. With XRP, you just send and it's received by the receiver. Of course, that's if you do a direct XRP to XRP transfer. But if you use your bank service to send the money, and they use XRP as the medium of exchange, it still happens much faster. It won't take you weeks to send your transfer anymore. Right? It'll be the same day, it'll be probably the same hour, it'll be even the same, within the same minute, because an XRP transfer is very, very quick. The thing that will slow it down is the bureaucratic stuff within the bank. They'll still need to check stuff if you send more than a certain amount. Right? If you send more than 10,000 or whatever dollars, they'll still need to check all that. All those rules will still apply. So in that sense, XRP won't actually save you time if you're using it through a bank, which begs the question, well, why would you use it through a bank? Well, people still use banks. And as long as people are still using banks, and those banks are considered trusted money transfer systems, then people will have to, accept the rules of the banks they use. If of course you're doing direct peer-to-peer XRP transfer, it goes through much more quickly. Now, the reason that banks like XRP is because the current system, SWIFT, that they use, there's other ones too, but SWIFT is like the main one. SWIFT charges like $25, $50, whatever it is, per transfer. And of course, if you send huge amounts of money, it's even more. And it takes days, if not weeks, to send the money. And with every day that passes, they make money on accrued interest, which is one of the reasons they make it take days. With the XRP system, you don't pay $25 or $50 per transfer. You pay fractions of a penny. And that's why banks love it, because they still get to charge the customer the $25 or the $50 or whatever, but they only pay a fraction of a penny. So they're going to be grossly increasing their profits while cutting out the SWIFT middleman, which is going to completely cause massive disruption to SWIFT, which is why SWIFT has been heavily involved in the whole XRP integration with banks thing, because they don't want to just go out of business just because Ripple exists. Well, let's see what happens. Anyway, so is it going to the moon? Well, Again, we don't care from a low time frame point of view. Right? It's totally irrelevant from the low time frame perspective. It's absolutely moot. Right? It does not matter if it goes to the moon or not. לא יודע למה, כתוב לי שאתה לא בארץ, כאילו. לא יודע למה כתוב ככה, אבל ככה כתוב. אפשר שקית? I got it. You got it. Okay. תודה. Have a good day. All right. Well, right, so that's why we look at the VEPs of an asset like XRP. We don't just randomly shoot for the moon, right? Because obviously you got to remember, even though it's a pretty good probability for now, assets are heading towards the upside in general in the market. It doesn't mean it's going to continue even for the rest of the day, let alone tomorrow or all week or next week or next month. Yes, you can have a significant push to the upside, but even in a push to the upside, you will typically have pullbacks 1, 2, 3, 5, 10%, even 20%. Totally normal during a push to the upside, right? During sustained buy pressure periods, you will still have periods of sell pressure. Why? Because people are going to take profit. People gotta, everyone has their own time horizon for when they want to buy in and when they want to sell out, right? There's nothing surprising about that. Markets need buyers and sellers, and you better bet and you better hope that there's going to be people who are going to sell, because what happens if people are only buying and nobody's selling? Okay, well, in theory, yes, that will cause the price of on offer to go up until it meets the seller price. Right? But what if nobody sells? People just keep offering higher and higher prices to buy, and nobody wants to sell to them. Then the people that want to buy can't buy, and the people that want to sell but at a higher price, they can't sell. So at that point, you basically have a flat market, which is not good. You don't want that. You want a continual stream of buyers and sellers. That's how you make a liquid market, right? And that's one of the reasons that when people say, oh, only diamond hands, they only want to be diamond hands, they only want to hold and never sell. They're kidding themselves when they disrespect people who sell. Because who do you think they're buying from? They're buying from people who are selling, right? Or they're buying from, a centralized organization that holds a significant amount that's selling, right? Or they're mining it and selling it, and buying it from mining systems that are selling it. Maybe even decentralized mining systems that are selling it, but they're buying it from something that is selling it. And again, there's nothing wrong with selling, right? It's important. You need sellers for buyers. That's how markets operate. Without both, you can't have liquidity. So remember that, and don't shade, as they say, the sellers in the market, because they actually help make the market, just like buyers do. if you want to think about it this way, buyers are putting their hopes and dreams into an asset, hoping that the asset will rise in price. Sellers are taking profit because the asset has risen to a point, or has gone to a point, where they've determined it's best to sell. And in many cases, the smart sellers sell when things are high. The not so smart sellers, the dumb money, if you will, they wait until things crash. And then they sell when things are at a low. And the smart buyers buy those things again. So, for example, the smart money a couple of weeks ago was buying up all of the lows, right? And I think it was last Monday, St. Patrick's Day, around then. Was it that one? Anyway, yeah, about a week and a half ago, 9 days, 10 days, whatever. There were lots of lows for a lot of assets. And it was, it's not the same day for everything. In fact, there were lower lows before for some assets, right? During this recent period of time since the relative highs of Bitcoin in January, right? So since then, prices have dipped, and at some point in early March, there were some lows already on some altcoins. Some of them are having their lows right now and just starting to turn around. So they all have their own kind of cycle, if you will, which is really just volatility levels. And what happens is, for example, with XRP, people who are trading it want to know, well, do I buy now? Do I sell now? What do I do? Just as an example. But they're saying the same thing about any coin, right? And if you're a trader, again, you shouldn't fear the volatility. You should look forward to it. You should hope that there's volatility on a regular basis, because it's the volatility that moves the markets, right? Quite literally, right? The buy pressure and the sell pressure is what determines how the market's going up or down, in a sense, right? If there's more buy pressure, prices will go up. If there's more sell pressure, prices will go down. But what creates that? Well, it's the volatility, the spread between the ask and the bid, also known as the variance. Volatility and variance are effectively the same thing. What is variance? It's the spread of data around the mean. What's that data? That data is the ask and bid. What's that mean? The mean of returns. The spread of data, or the delta of the ask and the bid, right? The difference between the ask and the bid around the mean of log return of investments, also known as mean of returns, or just the mean. It's not mean of price, it's mean of returns. It's very different, right? That volatility, that variance, is what causes movement, right? The direction of that movement is determined by the correlation of that volatility with the data set, the past data set that you're looking at. And that can show you the tendency of the probable move. Is it going to go up, down, or sideways? Well, there's 6 basic tendencies that are extremely accurate in determining whether or not prices are going to go up or down. Once you know those 6 basic tendencies, you can, with a fairly high degree of certainty, or a fairly low degree of uncertainty and a fairly high degree of confidence, you can effectively predict which way the prices are going to go. And that's why the alpha trading volatility trading system is as amazing as it is. Because with that system, you can actually predict price action extremely accurately. And not just high time frame price action. In fact, you can predict a low time frame trading price action, which you'll always hear voodoo TA people and people who don't trade, especially people who don't trade, they will tell you, well, there's no way to know which way prices are going. That's just not true. If you're a VEPS trader, you know for a fact that that is just not true. Right? We can know with a very high degree of certainty What are the probabilities? Now, there's always probabilities that it will go up, down, or sideways. Always. Right? It will always go up, down, or sideways. And the only time it'll ever go sideways, really, is when there's a perfect balance of buyers and sellers, and there's no spread between the ask and the bid. And that happens very rarely. The assets can be flat for a long period of time. And when that happens, it's an indication that you should not be trading that asset because there's not enough liquidity. You want to trade assets that have high liquidity, because that way you know that your trades will go through. That way you know that your trades won't suffer from slippage. And you want to have trades on coins that have a lot of liquidity that also have a lot of volatility, because that way you know there's a lot of movement in the price action. And there's a tendency, right, for slippage to destroy your profitability if there's not a lot of movement, if there's not a lot of liquidity, and if there's no volatility. You just have to make sure that because we know far too many people trade according to mumbo jumbo, and you don't need to trade according to mumbo jumbo. You need to trade according to what actually moves the markets, and that's volatility, right? And we can predict with extremely high certainty what is going to happen with volatility. Like I said, what direction the asset's going to go with the volatility and the correlation, just like we can with the entropy and the correlation. It also gives you extremely high probabilities, right, of determining what's going to happen. And also, you need to know the probabilities and statistics. Once you know the statistics and the probabilities and the entropy and the volatility, well, then you know with extremely high accuracy what is likely to happen with the price action of any asset you're trading. So now I've said it about 100 times in this video. I hope you get it. And when it comes to the question of XRP, I hope you understand, just like any asset, as low time frame traders, we do not care if an asset goes up or down. Right? We care only that we are on the winning side of the trade. So that'll do it for now. See you guys later. Peace.